So if you clicked this video, you are probably struggling with having a profitable forex strategy. You are at the right page. In today's episode, I'm going to be explaining to you a profitable swing trading strategy that I used to make tons and tons of money from the forex market. Remember, swing trading equals to pips. More pips equals to more money. If you are new around here, make sure to subscribe and let's jump into the video. Traders, this strategy is going to help you master market structure, because market structure is what we trade on a day-to-day basis. So for us to understand this strategy, guys, this is swing trading. Remember, swing trading is equal to pips, more money. So guys, the first thing we're going to identify a trend of the market. So I'm going to be doing this off a trade that I caught. So the first thing, what trade did I catch? I caught this big move, this one right here, from here to around here. So this is the move that I caught, but obviously price kept on going up. So guys, the first thing we're identifying is the trend of the market. So a trend of the market is the uptrend. Now, since I took this trade, I was looking for buys. So here I identify a trend of the market, which is an uptrend. So I draw my trend line like this, as you can see, guys. Well, so drawing a trend line is very easy. Just connect 1 point, 2 points. They're enough. If you have 3 points, connect them. Now, the other key thing we are looking for, a breakout. So currently you can see, guys, we had a breakout at this point right here, and where we had a breakout, you have to draw a line. This blue line, we're going to use it as a future take profit. But how? Because you're going to be looking for buys. Now, since price has broken out, it's not going to start going in a downtrend. So since it has been in an uptrend, you can see this is an uptrend, you can see, guys. So we can say this is a mini downtrend. So it can be a big downtrend or a small downtrend, but for us the main key thing is we want to identify when this trend is about to end, so that price can reverse and go back to the upper side. So you can clearly see price is coming down, you can see, giving us this clear lower low, lower high, lower low, lower high, as you can see, guys. Now, the other key thing to help you identify price is about to reverse and go back to the upper side is now turning points. Turning points are the best. A turning point is a point where price has reached in the past and has bounced off probably more than 2 times. So which point is that? This point and this point right here. So when we draw a line here and connect it to this side, you're going to see that this is also a turning point, just like this. Do you see that? A turning clear point. So now we have a breakout. We have probably a reversal. You can see, guys, because this is a turning point. Anytime when price reaches it, always goes back up. So now we need to confirm. We need to have more confirmation. And one of the confirmation that I like to see is divergence. Divergence is a reversal sign. Since we already have a reversal sign here, which is our turning point, we need to have more. So divergence. So what is divergence? Divergence is just a reversal sign. So you need to see price doing the opposite on our RSI. So when we draw our RSI, just like this, RSI stands for Relative Strength Index, and it's one of the best indicators that I use and I recommend traders to use. So you can see we have divergence right here, and it has to be in the same exact zone, guys. So guys, you can clearly see we have divergence in the same exact zone. So anytime when you want to catch a trade reversal, look out for divergence. So you can see my divergence is very clear right here. Now, the last puzzle piece here is now drawing a trend line. Since price also gave us more of a trend line right here, we have to draw it out. Obviously, we can't neglect it. So I'm going to delete this RSI, then draw my trend line. So which is this point right here. I'm going to connect this point right here to this point right here as you can see, guys, I've connected these 2 points. So guys, you can see I've connected these 2 points. So now, the reason why I've connected these 2 points is because, again, we can't neglect the fact that this is a mini downtrend. Now, since price has given us divergency and now it has broken out. Breaking out of a trend means price is about to reverse. A mini reversal, a major reversal, we just want to see a reversal. You can see price reverses and then pulls back into this area right here. The reason why also we had more of a fair value gap right here. So this is fair value gap, or what we call insufficient price action that has not yet been filled, but it will be filled. You can see price pulled back into that zone, but also at the same time pulling back onto our trend line. You can see, because remember, we want to catch a buy trade to the blue line. Now, the last puzzle piece is we jump into the 15-minute time frame for our confirmation. Now, when you look closely on our 15-minute time frame, guys, first of all, when price was consolidating around here, trying to pull back, it formed what we call a support level. This is our support level, you can see, guys. So onto this support level, you can see clearly that we had more of a breakout but it was more of a fake out. You can see with this one right here, we had a breakout. So what do you know about a fake out? A false breakout is we're always going to have that big red candles. So mostly we're talking about support. We're always going to have that big candle trying to break our support to tell people that, okay, price is really dropping. Then they will trap you. The green candle will go back and close from inside. Now, how do I take my trade? I always wait for this pullback. Immediately when price pulls back like this, and you can see when price pulls back, it almost gives us more of a tweezer bottom. You can see this candle right here close from inside, this other candle close from inside. So I always take my trade on this other candle right here. You can see right here on this one. Or you can wait for price to break a major zone. So which is a major zone is right this one right here. This one will be a major zone right here because it's a more of a resistance. You can see. So price breaks our resistance, pulls back. It gives us a bullish hammer, or what you call a hammer. This one right here. You can see, guys. So you take your trade. Now when we take our trade, we are going to set our target like this. Setting our trade just like this. Then putting our stop loss. Remember, our stop loss is 19 pips, 20 pips. So our stop loss is around this level right here, which is 20 pips. And then our target, we have to zoom out and put our target. Remember, at our blue line that we drew when this video started. When you start making analysis, that is where we put our target, as you can see. And then you pull this to the future. You can see, guys. So let me say this. Every time price breaks a zone, a trend line, there are 90% chances that price will come back to that point. The job for you is wait and look out for when price is about to reverse and go back to that part that it broke. I've seen this for quite a long period of time, and if you're wondering, did I catch this trade? Yes, I caught this trade, and I'm going to be leaving the screenshots right here on the screen anywhere, so that you can see that I took this trade on GBP JPY. As you can see, guys, this was our trade. I caught this big move to up here, but obviously I didn't stop here. I kept on holding my positions because this was like one of my targets. Price hit it, and I saw that this was more of a pullback for price to continue going back to the upper side. Because see, guys, price formed another new trend. Look at this, a beautiful, nice trend. We have price breaking out from here. For those that have watched my previous video, you saw how I took a sell trade off this breakout and retest. You can see price almost giving us almost the same thing. You see, guys, and now we are taking this sell trade. Look at how price is just going down, giving us lower lows. I mean, high lows, lower lows, high lows, lower lows. Like the process just keeps on happening, And then when you draw another trend line, look at this. Look at that. Look at that, guys. Look at that. Price breaks the trend line. You see that? Price breaks the trend line right there. Now, where did price break out here? Price broke out at this zone right here. You see? Right here. So I'm going to be looking for a possible buy to this line right here, because since we have price already breaking out right here, so meaning if I apply my Fibonacci retracement from this zone right here to that zone right there, you can see that I need price to come back up to this zone right here. So for me, I can go in for my buys. Remember, when price is shooting up to the upper side, we apply our Fibonacci from the swing low to the swing high. So I need price to come back to the 0.6 level so that I can go in for a buy trade, and I'll be taking my target. I'll be taking my profits right here, guys. Anytime when price breaks a certain zone, it always comes back. You only need to know when does price come back, guys. So traders, you need to trade and make money from the forex market, and one of the easiest ways to make more money, guys, is trading money that is not yours. And how can you do that? Obviously by trading funded accounts, guys. So the forex funder is what I recommend, guys. Most of you guys keep on asking me what account size do I recommend. I recommend the two-step evaluation. So the forex funder offers three account types: one-step evaluation, two-step evaluation, and rapid evaluation. So if you're a beginner trader, I recommend the two-step evaluation because for it it's not harsh. But when you look at the one-step evaluation, it's quite of harsh, mostly for the pro traders, And then the rapid evaluation, this is more for us, for those that just want to go straight into live trading. If you don't want to do any evaluation, just go in for that. So what do you need to do to pass the two-step evaluation? So what you need is, first of all, you need to accomplish 80% profit target on any account type for first phase, and then 5% for second phase. The next thing is you don't have to lose 5% your daily drawdown, and then maximum daily drawdown is 12%, guys. And then the leverage you're using is 1 to 100, and then you receive, or if you get your money back, whatever amount you pay for your account, guys, it's refunded back to you. You can see, guys, high impact news, you're allowed to trade it. You can trade on weekends, and also you need, if you want expert from advisors, you can still get them, guys. So if they can't help, I recommend is the 2-step evaluation, but also the 1-step evaluation. If you can handle it, go for it, guys. This is the Forex Funder. Get the accounts, guys, and as I always say, one payout can really change your life, guys. And remember, this is December time. It's time for us to travel, So, guys, back to our strategy. Guys, there is no better strategy that can teach you market structure the way this strategy does. Because remember, when price is moving, it goes from one market structure to another. Price can either go from an uptrend to a downtrend, or from an uptrend to a sideways market, So clearly, you're just playing with market structure, guys. Remember, as long as you have proper psychology, as long as you are disciplined on how you can hold your trades, as long as you trust yourself, you're going to be able to make money from the Forex market. I know the biggest problem is whenever we are into trades, we often panic. So I don't want you to panic. Why are you panicking if you trust your strategy? So as long as prices really has given you all the signs, you have marked everything, take your trade. Just stay disciplined, guys. So if you have enjoyed this video, guys, make sure to subscribe, and God bless you.